What's going on, everyone? Hope you're having a good day today. Happy Monday. Having a pretty good day myself. Found a couple really interesting opportunities this morning that I'm excited to go over with you today. I'm also going to be giving you an update on my discovery position. It's going pretty well, so we'll touch on that. And we actually should have a bunch of new people coming into the stream today from the this new Discord that I've sort of started chatting in. Shout out to my buddy Hallett for putting that group together and giving me a little room in there. Good morning, guys. Rob, Tim, Curtis, what's up? How you guys doing? Curtis, are you in that discovery trade with me? The thing's looking pretty good. You guys in that trade with me, or what's the deal here? The one thing about it is I was looking at it this morning, and I think the mid is one of my trades on that. I actually got such a bad fill. The spreads are so wide; they're like $5 wide. So getting in and out is going to be a little tricky. We probably should have chatted about that before getting into the position, but I think we're going to be okay. We're just going to have to ride it out. Ronnie Q, what's going on, man? Curtis is saying it had a little bit of vol at the close Friday and this morning, but it's been good. Yeah, man, I think we're looking pretty good on that position. I'm pretty happy with it. And then today, the trade that we're going to be taking a look at is actually, I think I've identified maybe a potential takeover that'll be happening for a stock, and I wanted to take a look at it with you guys. Nice, Rob. I'm happy to hear that, man. So, let's get into this, guys. Now, just to start off, for those of you that might be new to the stream here, my name is Sean. I'm one of the co-founders here at Predicting Alpha, and the entire purpose of this stream is to help you take a quantitative view on the market. Now, what does that mean? It means in order for us to win as traders, we need to learn to put some evidence behind our ideas, right? Why do we believe the things we do? Can we validate our ideas in any way beyond just maybe what someone else has told us or what we see on a chart or a pattern we see with our eyes? And this is what we've been doing for a number of years now to find a real edge in the market and really build a life out of trading. So if you guys have trades that you want me to take a look at for you, ideas that you want to break down, feel free to share them in the chat and we'll be definitely able to do that. But I do have an idea I want to share with you guys today. And the stock that we are going to be looking at is Rackspace Technology. Okay. Doesn't that just sound like a stock ripe for takeover? RXT, right? It just gives me takeover vibes before I even look at the data. You know what I mean? Well, let's start looking at this company quickly. All right. So first of all, company's about $4.5 billion, right? $4.75 billion. And the reason I stumbled across the stock was I quickly just did a little scan here for IV rank. Rob, if you know some stuff about this company, let me know. Right, so I was just messing around with the filter in the morning, playing around with it, and I scanned for IV rank, and RXT was at the top of the list with an IV rank of 100, meaning that relative to historical levels of implied volatility, we're seeing an implied volatility level higher than what we ever see. Right, it's at all-time highs. Right, and if we go here, you can see that the implied vol at 86 is basically the peak that we see over the last year and a half, 2 years. Right, since it's basically come out. Right, so when did this go public? Yeah, okay, see, it went public in August of 2020. That's why we only have data to there. But, right, all-time high implied volatilities. Now, there's one of two things that we could be doing here, right? So number one is if we look, whenever volatility does reach that level, it actually crushes, right? It's crushed 3 times when it gets to that level. And we can see here on the vol cone, we're at the all-time highs for implied volatility across the chain, basically, right? All across the chain, we are seeing really, really high levels of implied vol. So, off the bat, we're kind of thinking, wow, maybe this is a little pricey. Maybe we should be selling it. But what I'm going to do today is I'm going to build a case for why maybe we shouldn't be selling vol here, and it might actually be an opportunity to buy it, right? So if we zoom in on 1 month, we can see here that in the last like since Friday, right? Since Friday, we have seen volatility increase by 30 points, right? It seems like overnight, vol just shot through the roof with no real change in the realized vol, right? Like obviously we're realizing some vol right now, but the implied vol just shot up. And that's not the only thing that saw this crazy increase out of nowhere. If we zoom in on the option volume, we went from having no options traded around this thing to 39,000 options being traded in the last day. Or calls being traded, right? If we look, the put volume is still nothing, and the call volume shot through the roof, right? If we look at the put call ratio, boom, you can just see it went from a ratio of 1.6 to a ratio of 80, right? 80 calls for every put traded. So I'm sort of thinking to myself, maybe someone knows something here, right? Now, another thing we might want to ask though is, okay, well, one more thing, guys. In line with this crazy call volume, we're actually also seeing insane call skew on the 10 and 30-day options, right? With at the money's trading at around 86, 87. The Delta 25 is trading at 93 on the 10 days, right? Huge amounts of call skew here, okay? Market is clearly pricing in some sort of risk in the short, medium term, right? Clearly there is, within the next 30 days, market's pricing in something to happen. And I'd be really interested to find out what, right? Now, with that information, all of a sudden, we're maybe thinking, maybe vol isn't so cheap, right? Or expensive. Maybe it's actually cheap. Maybe someone knows something here that we don't. So, DJ, the trade that I'm going to get to here is I think that we could maybe be buying a call. Just simply, I'm usually trading volatility, but I think, a directional bet, buying an at-the-money call might not be a bad idea here. I think that this company might get taken over. It looks like someone knows something that we don't. And if we come here, right, one thing I always like to do is I like to go to StockTwits to see what the retail sentiment is. Because, if I come here and I see 10,000, 15,000 retail traders flooding the forums, well, maybe I would think it's them buying up all this volume. Right? We can see, yeah, sure, they're all very bullish, but message volume is pretty low. Only 5,000 watchers. It's nothing too crazy. Curtis is asking, why not just equity? So buying equity is not a bad idea. But remember, so I'm not necessarily just saying I think this is a good stock to hold, right? I'm not just thinking the stock will go up. I'm thinking that this thing has the potential to get taken over, in which case I want to be long volatility, right? I'm expecting a massive jump in share price if that were to happen, right? Now, obviously, with these long vol positions, guys, I always got to give my little disclaimer. A lot of these positions lose, right? When you're buying options, you're going to lose a lot of the time because the nature of long volatility strategies is a lot of small losers, the occasional massive winner. So make sure you size this bet accordingly. Just buy a call at the money. You don't need to get fancy with it or load the boat on it. Something simple doesn't need to be too complicated. Would we actually see implied volatility go up any more from here? You could, right? So the one thing to note is, people who have insider information that come to the options market, it's usually not the smartest play in the world because it's so obvious, right? So you usually don't see it. But, so you could definitely see IV increase more, which if you were long volatility would be beneficial. In fact, if I were to continue to see IV increase here, I'd definitely be buying some vol because think about it, right? The name of the game is be on the right side of the trade, right? What side of the trade do we want to be on? Well, I don't want to be on the same side as, the average retail trader, right? I want to have an edge over that guy, so if I'm seeing, if I came in here and I saw, 20,000 watchers, huge message volume, and everybody's bullish on this thing, well, I'd probably be saying, you know what? It's probably not going to happen, right? On average, it's not going to happen. But I come here, yeah, sure, they're all bullish, but there's only 5,000 of them, and they're not really chatting much. So I'm not too, I'm not thinking it's the retail guy buying up all these calls. Now, could it be a relative value play? Sure. But we're also seeing this crazy call skew, We're seeing this crazy call skew here, and it's just not adding up for me. It's not adding up for me that this is someone overreacting. This looks more like something where someone knows something I don't. Now, the one thing that I only started looking at this company this morning, so maybe one of the things that we could do is we could do some research into what actually is happening around this company, right? Like is there a news event coming up? Right, RXT press release. Like I'm not seeing anything crazy. Is it a big Wall Street Bets stock? Is there no overlap between Wall Street Bets and StockTwits? Thought it would have been reasonable to say there is. I just can't wait for my own news and sentiment thing to come back in here on the next terminal release. It'll be back. Yeah, Adam, if you can tell me a little bit more about it, that would be great. Let's get this to load. We'll open up Thinkorswim. We'll go take a look at the trade. Also, quick update for you guys on the Disca position, right? So I'm currently in a trade on Discovery. Similar type of situation. If you actually look, and when we sorted by IV rank, Disca is the second highest here with an IV rank of 98. It's funny how they both sort of showed up, and that's what we're looking at today. But if we look here, across the chain, IV is just at all-time highs, right? We're seeing that IV start to get crushed here. The trade that we put on Thursday, I believe, was we basically sold volatility. We sold this right here. This is what we sold. Sold it for about $18, $19, and I believe vols have come down a few points. So position sort of looks like this. Right, where we're up a little bit of money now. Nothing too crazy, but slowly it's starting to print. For a one-day trade, not too bad. I'm still in the position. Oh yeah, Adam, you might be thinking of RKT, Rocket Technologies. This is a RXT, which is Rackspace Technology. I don't know. Close enough for me, I'm sure there's maybe a little bit of, maybe that's what it is. Maybe it's people making a mistake. So, we're currently in that trade on Discovery. It's going very well. Maybe I'll roll some of those positions into, roll some of those profits into a punt on RXT here. But I'm calling it now. 30 days from now, this company's getting taken over, all right? It's happening. Arnold's asking, if positions get out of hand, will you delta hedge? So on Discovery, I would delta hedge it, but if it comes to that, I'm probably wrong, right? So let's take a look here, right? Let's say, if the stock were to go up 30%, we're over here. Right? I'd probably hedge every 250 deltas or so. Right, so I'd probably be hedging around here if the stock were to go up maybe 12%, something like that. Yeah, if stock went up about 12, 13% or down 12, 13%, I'd be hedging my deltas for sure. And the reason we're doing that, guys, remember, the name of the game when it comes to trading is take on the risks that other people avoid because they're usually overpriced, and then remove the risks that you don't want. If all you have a view on is volatility, you don't want delta exposure. If all you have a view on is delta, you don't want, Vega exposure, right? And depending on that is how you structure out your trade and how you manage the position. So yeah, you're correct there, Arnold, for sure. So let's see, right? Discovery, check. RXT, check. Now, guys, if you have any trades that you want me to take a look at, now would be the time to share them. We're getting out of earnings season here. Things are slowing down a little bit. Be happy to take a look at trades you want. But for the time being, I'm going to work with Ronnie here, Ronald Q, to see if we can find something to delta hedge or gamma scalp. So when we're running a gamma scalping strategy, guys, just remember, we want to be finding some cheap volatility, buying it, and then hedging our deltas to basically convert that implied volatility into a realized volatility. Oh, GameStop, eh? Yeah, we got GameStop. All right, yeah, we'll talk about that in a bit. Okay, so Ronnie, here we go. Let's do a little scan here. Look through the market and see what we can find. So first things first, Ronnie, we want to make sure that we're trading something liquid. So I'm going to do a price and volume filter here. $15 and 3,000 volume. Okay? Done and done. Now, think about it. We want to see an implied volatility lower than our forecast. Because what that means is we think the stock is going to have more volatility than what the market is implying. So we're going to come here. We're going to drag from the right, and we're going to look for one below 1. Right? Think about it. The IV versus forecast takes the implied vol number and divides it by the forecast. So anything below 1 would be would mean that this number is lower than this number. Right? Implied vol is lower than our forecast. Okay, then I'm going to put a little vol filter here. I want to make sure that whatever I'm trading is actually moving a bit. So let's call it 36, maybe even 40, 43. That's good. Realized vol, we want it to be realizing maybe a little bit more. 51. Things with an IV rank, let's say over 60. Right, something that's getting up there, right? It's moving more than it usually does. And I think that looks pretty good, right? Think about it. What we've done here is we've put on a filter for liquidity. So we're making sure what we're trading is pretty liquid. We're looking for things that have cheap volatility, that are actually moving a bit and moving a little more than what the market thinks, and that are having a higher level of implied vol than what they usually see, right? And we can get a little bit more, you can always play around with these filters a little bit, try to find something that better suits what you're looking for. This is, what's coming out on the next terminal release is you're going to be able to click a button that says, Gamma Scalp, and it'll automatically apply very similar filters to this, and you'll just have a list that you can look through. But you're going to want to find your own sort of groove eventually, right? Like, maybe you go, you know what? Like, I remember in the interview with Hutch, right? The one from Thursday. He started off trading the earnings strategy that he learned through Predicting Alpha, but then he improved it. As he got better at the strategy, he started to add little things to it and really make it his own. And that's where you want to get to eventually, but you want to start with something sort of basic like this, right? So let's say maybe we bump this up to 70. All right, now we're looking at 24 entries, okay? Lots of stocks for us still to look at. And let's say we want to start by looking at the ones that have the lowest IV versus forecast. Okay? It's funny, RKT is on here. DDD, what's that? The due diligence. Let's see. Implied vol of 98, realized vol of 146. What the hell happened to this stock? Right? Maybe, we can you basically want to come through, take a look at the different stocks, see if anything makes sense to you, right? This is one that's been realizing more vol than what the market's been thinking. It's a great stock to be maybe doing this on. We're seeing a lot of risk priced to the up and downside here. This might be a company to do it on. HIG. Financial Services Group, eh? $24 billion company. Okay. Any news coming out around it? Hit with analyst notes after a potential buyout approach. Okay, yeah. So maybe we can buy some vol here. All right, yeah. So it looks like they're in some sort of buyout talks right now. So you could probably buy some vol here, but it'll probably sit still for the next little bit. Actually, maybe not. Short-term vol pricing risk to the up and downside might be worth gamma scalping this for sure. This is looking pretty good. Right? And we would basically just go through and take this list of companies and try to shortlist it to ones that we actually like. Right? So maybe we look at LC. We see, okay, vol's, it's not super cheap vol, but it's realizing more than what it's implying. And that's really what matters in the end of the day. So we'd come back here. Right? LC stock. Lending club. Peer-to-peer lending. Interesting. Right? Stock's moving. Right? These would be good companies to do it on. Right? So Ronnie, this is what I'm sort of seeing right now. Right? You want to set up filters like this. I'll have this live up, and you can definitely go back and watch it, apply these filters. And just remember, Ronnie, in the near future, we're going to have a little button. It's going to be right here in the top right corner of the scanner. And it's basically going to let you click here, pick a strategy. It'll do the filter for you. And then you just got to know how to structure it out. So let's say we were going to do it on, let's say, LC. Right? What would we do? We'd come over here to our brokerage, go to LC. And then I'd probably be trading the monthly, right? I'd be looking at this, April 16th contract. I'd come to at the money, which is looking at about $21. And I would simply buy a straddle. Right? So the straddle is going to cost me about $3.85. Right? So we can put on a one lot, There we go. Right? Stocks is going to about a risk of $385 per lot. And anytime my deltas, got to maybe like 30 or 40, just because we're not trading a huge amount of capital here, I'd be hedging them, right? So on the downside here, when we have negative 37 deltas, I'd be, buying 37 shares. Stock rallies up, right? 37 delta, I'd get rid of them, and that's how I would handle the position. And what you're looking for is for the stock to realize more movement than what the market's implying. And if that happens, you're going to make money on this position. Right? And this is a simple filter for stocks that fit that criteria. So I hope that helps, Ronnie. Now we got a couple other stocks that we want to take a look at today. We got Arnold dropping TME in the chat. We got Huya. We got GME. Right? So let's take a look. TME. By the way, guys, just for the PA guys in here, this earnings date number is going to be fixed on the next release. So probably by the end of this week. So thanks for being patient with that, guys. So TME, you're saying that it's a good short vol opportunity. Okay. Let's take a look. Lots of option volume. Cool. Lots of volume. Calls and puts, negative P&L. That's always great to see. Straddle P&L, hugely negative. Hugely negative. Biggest move it's ever realized is just an 8% move. So, sure, we don't have a ton of events to look at. We have 1, 2, 3, 4, 5, 6, 7. It's almost 2 years of events, a little less than what I'd normally like to see. But, with an implied move of 7.6 and an average move of 3.6, I think that the name of the game here is let's sell some volatility. Right? I think it's pretty straightforward. I like how it's not a super expensive stock, so a lot of the guys can get in on this trade. I think it looks pretty good. We come over here. Let's go to TME. We'll see what it's like if we need to do the straddle or the iron condor. Now, one thing that does suck is it looks like we only have monthly contracts here. And you guys will see how this has an impact, right? So let's say we do the at the money straddle. We sell the straddle. It's about $4. Cool. Right? So here's our position right now. Assuming the earnings is tomorrow, Arnold, I'm taking your word for it. Position will look like this. All right, let's figure out what we got to adjust the vols by. Like, if you look at this, there's like very little vol being priced in here. This can't be right. The data might be a little funky here. Maybe 5 points drop. 4 or 5 points. Right? So, because we're trading the monthly, there's not a lot of juice in here, man. There's not. It's going to be a little tricky to trade this, right? You can see here, like, this is what our P&L is going to look like in the morning. Right? This doesn't, I don't know about you, man. This doesn't get my rocks off. This doesn't do it for me. So that'd be the one thing that concerns me, Arnold. It does look good, but with it only having the monthlies, I don't think we get the exposure that we're looking for here. So I'd probably stay away from it. It's nice to see we got 24 people on the stream, guys. Just a little reminder, if you have found the stream valuable, make sure to subscribe and drop a little like on the video. That's really all I ask for in return. And one last thing, this is something I'm only offering to people on this stream right now. We are going to be doing a free trial of Predicting Alpha, probably releasing end of this week at the latest. We're like right there for this free trial to get released. I'm only offering it to people on this stream right now. And if you want to be on the free trial waitlist, you can just send a message to Sean at predictingalpha.com. And I'm going to add you to the list. And I'll send you over a link when it's ready. You sign up, you'll be involved. You're going to get access to over 200 hours of education, the terminal, a one-on-one call with me and my business partner, Jordan, and our private community. Right. So if we come here, you can see we have our chat. All right, we got our chat here. Really, really smart traders in there. It's pretty awesome. Yeah, that sucks, right, Arnold? Like, we're back, hopefully. We back? Okay, let's chat about Huya. Okay, we got pretty inflated volatility right now. Let's come over to the earnings analyzer. Look at that, guys. We got a 13% implied move, an average move of 4.8%. This is one of those stocks that has been really, really decent to sell vol on. Had one blowout move back in the day. But, yeah, this is pretty good. Right? Look at this earnings move distribution. So weird. It's like most of the time we get like no move. And then occasionally we just get this huge blowout. But what's good to see is this blowout to the downside, we'd actually still be making money. Blowout to the upside would have cost us for sure, though. But I think this is another one of those trades. I think this is one that we definitely want to be selling some vol on. And I think we have the contracts to make it happen too. Let's take a look. Yeah, okay, perfect. So we're going to trade the March 26 weeklies. So it's not super liquid. You can tell from the bid-ask spread here. Right, it's pretty widespread if we go out another week. So it's not the most liquid. But, after that call with Hutch, I'm starting to think maybe it's not too big of a deal, right? Maybe we just go naked on it. We don't need to be too concerned. All right, let's come here. Sell the straddle. Right? This is what our position would look like. All right, let's bring this back a day. Vols are flat. So let's see what this is going to look like in the morning. Right, so we come in here, we go to Vol Insights. We take a look at what the difference between the implied and non-event volatility is. Right, 107, so that's 34 points. We should see this drop. Wow, that's a huge drop in vol, eh? 34 points. Minus 34. And move it forward one day. Right, so this is what the trade will look like in the morning. I think this is a good one to put on, guys. Right, we're either going to make 94 bucks, or let's say we see the biggest, we'll stress it the way Hutch does. Let's take a look at what the biggest move was, 22%. What would our position look like if we were to get a 22% move in the stock, right? We take a pretty big hit, right? We would lose about $300 per lot if we got a 22% move. So I would definitely stress to this size of a move, right? 22% on the upside. It should be 22 on the downside too, right? 300 bucks there, 300 bucks here. That's what you're risking, more or less. Obviously we have that unlimited exposure, but given, a quick look, worst case, I'm thinking we're losing $300. And if this thing doesn't move or moves only a little bit, we stand to make a pretty solid amount of money. Right. So the way that I would do this is, let's say you're trading a, let's say a $5,000 account. I'd maybe put on one lot of this, 2 lots of this at the most. If you have bigger, you want to start scaling up accordingly. But definitely, be careful. We are naked on these positions, which means we're going to keep more of our advantage, but you want to be careful. You don't want to just be blindly throwing your whole account on something like this. That is how you end up blowing up. But it looks like we have good edge here. I think this is a great trade. Curtis, good job finding this, man. And then we have GME. Right? So GME, I can't imagine what the implied move is here. Right? 21% implied move. Is it still realizing a lot of vol? Let's see. Right, only down 2% today. Yeah, you can see, GME down 2% today. Implied earnings move of 21%. Right, that's big. That's big. It's such a tough one to sell, guys. It's such a tough one to sell. It's like I really want to do it, but I'm honestly not sure. You know what? Here's what we'll do. What day is their earnings on? Let's see. Let's see. Why am I not finding this? Why I hate when it doesn't come up. Let's see. Earnings Whisperer. All right. All right, guys. When is it? Tuesday night? All right. I'll take your word for it. I friggin' hate this. I just can't wait for this to be fixed. Do a calendar straddle. Yeah, there might be a different structure we can take here, but in the end of the day, you just want to sell the vol, right? You want to determine if it's worth selling, and then you want to do it. Like I would probably, my gut's saying to stay away from it, but I think you end up selling it, right? I think it just makes sense. I feel like all the moves here are coming from macro. It has nothing to do with the company's earnings, anything like that. So I don't know what information would come out from their earnings event that would cause this thing to move like crazy. Unless it was to the downside. I don't know if we'd get upside movement from their earnings, that's for sure. So yeah, I think but then again, it's one of those things, it could, macro vol could just pick up on it again. Right, could just pick up. I don't know. I liked Jordan's idea. Let's do a little PA fund. We'll all get together. We'll all pitch $200, and we'll sell one straddle, and then we'll divvy up the profits. I liked that idea. So yeah, guys, do we have any other stocks that you want me to take a look at today? I'm seeing we have 22 people on the stream right now. It makes me really happy to see, but chat's looking awfully quiet today. Let's see what ideas you guys have. Let's break it down, right? I can help you try and figure out the best way to structure your trade, what the data says, right? This is information that outside of the 24 people on this stream and the members of Predicting Alpha, nobody really has it, right? This is what this is very similar to what people pay $25,000 a year for a Bloomberg for. So let's take advantage of it, guys. I'm going to be hanging out for another couple minutes here. We tend to do these just from 10:30 to 11 Monday to Friday. We keep them short. We look at a few ideas. while I'm waiting to see if anyone has a trade they want me to look at, I'll just recap today what we're thinking. Number one for earnings, Huya looking really good. I really liked that one. Shout out to Curtis for sharing that. Then we are also looking at, I believe it's RXT. RXT is my bet on things, on a takeover happening here, right? I bet you we could see a little takeover. That's my bet, right? Vols at all-time highs. No real reason for it that I can see. No real retail sentiment. Huge call skew. Someone knows something I don't, and maybe it's worth a little punt. Recap on my discovery trade. That's going really well. Still in the position. Still here. Still hodling. Not going anywhere anytime soon until that vol drops off. And then we have two trades that people want us to look at. They want us to look at Tesla, and they want us to look at F. So the thing with F that if I can recall, is they've recently come out and given some news that they are going to be moving more heavily into the EV space. I believe they allocated like $20 billion in cash towards it, which is pretty sizable. What trade, Arnold, are you talking about for RXT? You'd want to bet you wouldn't want to bet more than what you're willing to lose. It's a punt. It's either going to hit or it's not going to hit. You make a 1 or you make a 0. Yeah. So the thing with this is it looks pretty fairly priced, given how much it's realizing in terms of volatility, things like that. What I'd probably do here, right? I'm seeing a lot of lots of volume still, right? Things still trading pretty healthy. I would probably, I don't know if I'd be selling options around here, but what I would probably do is if you wanted to buy some options here, I'd look at gamma scalping it, right? It looks like it's just going to chop around for the next little bit, right? And if it does this and you buy a straddle, you're going to get smoked. There's a little bit of skew to the call and put side here. So you could maybe do, something like this if you're bullish. All right, let's open up F. All right, I'm seeing that call skew. So I can probably come in here. Let's say we go to, 2 weeks out. Let's price this. All right, let's sell the straddle. Going for a buck, eh? Such a small stock. Unbalanced butterfly. All right, actually, let's go to 1250. Buy, unbalanced butterfly, 1250. We'll go up $2, 1450, and then 1550. Oops. Let's see. Or you could put on something like this, maybe. You get a bit of leverage, 3-to-1 leverage. Something like that. 1250, 1350, 14. All right, something like this. A little bit tighter of a range, but you get, 4-to-1, 5-to-1 payoff. I don't think there's anything too juicy around it. I definitely wouldn't be, counting them out of the game with this whole EV thing. I know we have a few people in PA, for example, who, they're like, why would you ever buy a call on something like Ford? But I don't think they're counted out of the race. In the short term, if you think they're going to trend up, you definitely want to take advantage of that little bit of call skew, right? And the vol level, is it pretty high? No, it's pretty normal. It's a pretty normal level of volatility. So I would either that's why we're not getting that crazy risk reward, right? The vol is not that expensive. It's a pretty fair price. So it's just that call skew is giving it to us. So I'd either do this, or you could come here if you're unsure about the direction. Buy a straddle, cost you 87 cents. Right, pick up this, and you gamma scalp it. Gamma scalp it as you move forward. And for those of you that don't know what gamma scalping is, you can send me an email, right? Same one for the free trial, Sean@predictingalpha.com. And I'll send you over a video on gamma scalping that you can watch teach you exactly what it is, how to use it as a strategy, what sort of criteria you'd look for to get it. It's one of the private videos from the live workshops we do with the Predicting Alpha team. But I think it's worth everyone learning, so send me that email. And then besides that, do we have any other stocks? We had a message here from Curtis. He said, how far out do you think we should get the call on RKT? Thinking of punting one. Sure, Curtis, take a look at this. Or RXT. Yeah. So let's go to RXT on the terminal. So if we look at the skew analysis here, all right, let's take a look at the 90-day skew. All right, 90-day skew sort of looks choppy, looks kind of weird. It's the 30-day and the 10-day that are really, really steep. So I would probably be buying 30 days out. All right, let's go here, RXT. I'd maybe pick up either the April or the May. And I would just pick up like an at the money. That's it. I'd buy this. Boop, that's it. Little at the money call. Risk $100 per. And if we get, let's say bought out for a premium of 30%, we're going to make 400% or 500% on our money. It's pretty cool. Pretty chill. But obviously, we're betting on a takeover here. But I think it's worth the punt, right? Just a little punt. It all seems to be adding up. IV increasing, no real reason why. Call volume through the roof. Lots of call skew. Vols at all-time highs. Not really too popular in the retail space. Right, we always want to think, guys, who's on the other side of my trade here? Is it a punter, or is it maybe someone who knows something more than what I do? Right, and in this case, since I can't figure it out, maybe it's someone who knows more. Right, maybe it's someone with inside information, something like that. And for that reason, let's hit it. Why not? Right, small enough that if we were wrong, we can quickly lick our wounds, move on. We're not going to be in too bad of a spot, but also big enough that if we do hit, big enough that we care about the position, and that if we do hit, it feels good, it pays. Okay, quick look at Tesla for you, 1914 ABW. I'll take a quick look. All right, vols on Tesla here. Short term, looking maybe a little bit cheap. You might want to pick up some long vol here. Once again, gamma scalping this, probably not a terrible idea. It just moves so much. It's just so crazy. Vol's looking pretty fairly priced. All we got to do is take a look at this vol cone here. We can see we're right on the median. And with today's move, you would have been printing a little bit if you were long vol, that's for sure. Yeah. I'd buy a straddle, buy a short-term straddle. It's all good. Longer dated vols, wow, they actually started coming in. That's crazy. We were selling this up at like 77, 78 vol, I believe. We had to get out though. But yeah, nearer dated by a 30-day straddle, gamma scalp it. Doesn't look bad. I think it's a play for sure. Skew's pretty fair. Contango's pretty fair. So Adam's asking, when would you consider exiting Discovery? So this is, there's no hard set answer here, but what you're really trying to do is you have to identify what you think fair value is. So one way we can do that is we can use these option calculators here to calculate the price of the option, and then swap out what I think volatility will be, and then that difference in price is what I'm looking to capture, right? So I'm going to sell it today for, let's say, $10 and hopefully buy it back tomorrow for $9, something like that. But the way that I quickly did it, or can do it here for you guys, is we're seeing vols, the 120, the 90-day vol up at 80 points. I'm thinking it can come down 15 points. I'm looking to make about I'm looking to make about $3 on my position. Right, so I sold it for $19. I'm looking to exit it around $16 because one thing I'm thinking is it does make sense that the new average vol will be a little higher given all this new information that's come into the market. But I do think that where it's at right now is way too high. Way, way too high. So looking to make about $3 on my position. Yeah, so Random Digit 23 is asking, when people say long vol, that means buying volatility to end up selling it when IV dips, right? So so let's really think about this for a second, right? What is implied volatility, right? Implied volatility, all it does is it tells us what the market thinks is going to happen in the future, right? Think about this, like how much do you think the S&P is going to move tomorrow? Maybe 1%, right? 0.5%. How much is Tesla going to move tomorrow? Or GME? Maybe GME could move 20% tomorrow. So clearly, GME is a more volatile stock than the S&P. So would it make sense that options on the S&P are cheaper than options on GME? Well, it would in terms of dollar amounts because the S&P actually trades at a higher dollar price. But in terms of what that option, how that option makes money, right? It's not just the dollar price because it's relative to the stock, right? Think about this, like is a penny stock call that costs you 20 cents cheaper than an Amazon call that costs you $200? Maybe not, right? Like it's, sure, in dollar terms it is, but what if that penny stock is trading for 1 penny and the call is 20 cents? All of a sudden it's trading at 20 times the price of the stock. It's crazy expensive. And and the Amazon one might be fair value or cheap. So implied volatility tells us what the market thinks is going to happen to the stock in the future. And then our job is to go in and say, do we agree or disagree with that? Right? If the market thinks the stock's going to move 10% in the future, in the next 30 days, and we think it's going to move 50%, well, we disagree with the market, and we would be buying those options, right? Because they look cheap to us. Buying those options is called long volatility, right? Think about this. If you're long the stock, you think the stock's going to go up more than what it is today. If you're short the stock, you think the stock's going to go down less than what it is today. If you're long volatility, you think the stock is going to move more than what the market thinks it's going to move. If you're short volatility, you think the stock is going to move less than what the market thinks the stock is going to move. That's sort of the gist of how long and short volatility works. And then obviously there's way more nuance to it, but we can save that for another day when maybe we're, trading longer dated options or something. Like what we're doing on Disca, right? On Disca, I'm not saying the stock is going to move less than what the market thinks. That's actually not my view. My view is the market is irrationally saying how much the stock is going to move, and the market is going to become more rational in the future and change its opinion. So the level of implied volatility that the market thinks there'll be is actually going to come down, not the movement of the stock. I hope that helped clear some stuff up, because we are going to wrap up the stream there for the day. Random, it was good seeing you, man. For everyone new on the stream, it was really good having you come out. I hope I earned your subscribe, and if you guys have questions, feel free to ask. Curtis, Arnold, Koa, Tim, Micah, good to see you. Rob, guys, it's always a pleasure. It's always a pleasure. We'll see you guys on tomorrow's stream. And you guys owe me a beer if RXT gets bought out. Thanks a lot, Arnold. I appreciate it, man. Take it easy, guys. Have a good day. We'll talk soon.